Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 3rd of August. We are 2/3 of the way through our year. We are trucking along, and plain and simple, it's been a year. It's been a wild year. The recap for last week, the S&P index rose 1.7%. Let's face it, it basically came down to technology. A lot of it came down to Apple. The S&P ended, it's been in this month of July at 5.7. See, I kind of wonder about it, but the short answer is the index is now up 1.25% for the year. We are still worried about COVID cases. We are liking technology, real estate, consumer communication services, and commuter discretionary. The four sectors that were in the red last week were energy and materials were the big losers. In all honesty, energy has been down all year. It will be years till energy comes back. It is not going to be years because we have no airline travel going, or so little airline travel. It actually has very little to do with that. It also has very little to do with the fact that people are now working from home. It has everything to do with there's an oversupply of oil with Canada, Mexico, the United States, Brazil, Venezuela, Russia. There is an excess of oil hitting the market. Let's face it, with basically what used to be controlled 100% by OPEC. We are now in a position where gas is going to trade like a true commodity, not a monopoly that's been held on by OPEC. It's good to see. Part of me is really curious when you see oil fields dry up and then they fill up again. I wonder if oil is not a finite resource, but I wonder if deep down inside that we've got it wrong. Wouldn't it be funny to find out that oil is an unlimited resource? Doesn't help out our pollution problem with the cars, but I would laugh my you-know-what off if we found out that, plain and simple, oil truly was a renewable resource. Not saying it can't be, not saying that it is. It's just interesting how there are some oil fields that are bone dry, closed down, in 10, 12, 20 years, they're full again. Makes me think, makes me wonder. I actually did get this conspiracy theory from a book that I read way back when. Just interesting to think out loud. Boosting consumer discretionary shares where Amazon jumped 5.2% last week. Their revenue climbed 40% year over year. Facebook shares rose 10%, recording a record high on Friday at 255.85. Still holding the 250 level. Obviously, we have Apple. And when it comes down to it, Apple moves our markets. So Apple, the top and bottom line, if you're looking at what the real results were, I should have them, right? Come on, Hurley. Where were Apple results? Let me get these out for you. Apple results last week. Apple came in at the earnings per share 2.58 versus an estimated 2 0.06. Revenue came in at, man, I can't see. I need my glasses. Revenue came in at, is that right? Nope, that's Eli Lilly. Revenue came in 59.685 billion versus an estimated 52.238. So basically, they only beat estimates by $7.4 billion. Absolutely amazing. There's more I could go into it, but this is what pushed Apple on top of August 24th, 2020, date of record, and August 30th, 2020. It actually is 31st, I'm pretty sure. 31st, date of receival. So what does this mean? For everyone that has one share of Apple on August 24th, will receive 3 more shares on August 31st. What does this mean for contracts? Those that have leap long calls, and let's say the stock is trading at $480 a share on 08/24. I guess it's going to be 08/31, right? We will see Apple leaps and we're just saying you have, we'll say Apple leaps at 500. We'll go for every 1 leap will turn into 4 contracts at $120 strike. Now, there are times, Kevin, what if Apple is at $477? So let's do the what if, right? What if Apple is at 477? Then you just divide it by 4. I'm going to get my calculator and do that. We go to 477 divided by 4. It now has a price of, let's make it even more difficult, 477 and 77 cents, right? You then take 477 and 77 cents, divide it by 4, and you come out to $119.44. And what typically happens, it's actually 0.425. And what typically happens, this will turn into a contract at $119.50 strike price. Is that beneficial for you? What do you think? Is that beneficial for you if they turn this contract that mathematically turns into $119.44.25 Is that to your benefit if they turn into a $19 and where is Keeve at? Keeve is muted. Is that beneficial if they take that contract and round up for you? What do you think, guys? Is that beneficial if they decide to round up to help you out? What do you mean you're not sure, Lance? You should be sure. Think about what is the right or obligations associated with a leap long call? The right to buy a stock at a certain price for a certain period of time. So there's a bunch of us here. Is it in your best interest if they round the contract up? If you think it's yes, please tell me why. If you think it's no, please tell me why. Jeff Schaffner was kind enough to say yes. He's out there on a limb. Yet Lance is now changing his tune and saying no. But Mary, let's give it to Mary. Mary, you are correct. No, it is not beneficial because they added 5.75 more cents that the stock price has to move for you to be profitable. That is 100% correct. Let me read that one more time. No, it is not beneficial that they move the strike price or round up because you now need the stock price to move 5.75 cents more to be in the money and or to guarantee you a profit. They are all in essence screwing you out of 5.75 cents of upward stock movement that you have to now make up that $5, 5.75 cents to put yourself in the money or to guarantee yourself a profit. It would be beneficial if they lowered it for your longs. Now, you know what's the bugger? You might see on the shorts and on the spread that the spread will go down to $99. The strike price will still be $99.50, but the spread in the short side will be at like $99.40. They will make sure that the spread is in the market's favor, not your favor. So yes, on your leap contracts, if it's at $477.70, guess what? You're going to get hosed out of $5, 5.75 of 1 penny. If you're short, you're going to get hosed out of 4 pennies, 4.25 pennies is the correct way to state that. So usually when you have a stock split, the split is not in the favor of the holders of the stock and the contracts. Are there any questions there? If you understand it, type in a yes. If you don't, type in a no. Jeff, thank you for going out on a limb. Makes sense to everyone? Let's make sure we're all on the same page. In essence, the spread gets gobbled up by the market. And if you're long, you're going to lose 5.75 cents, which is 5.75. If you're short, you're going to lose 4.25 cents on the transaction. You will not be better off. The market kind of hoses you this dime of spread. All right, I think I had it in here somewhere. Let's go to what typically happens immediately after the split and shares are received. Can't spell. What typically happens? Yes, most likely, Jim, that's exactly what happens for option prices. They round up and not in the favor of the options holder. Maud and Mary, both at the same time. What typically happens? Mary says sell off, and Maud says price usually goes down, which is exactly right. Someone like me that goes through a 7-for-1 stock split usually has had a pretty big run up on the stock. And when you have a pretty good run up on the stock, when you have a stock split, man alive, when you have a stock split like Apple, you usually have a pretty good run up, which means you now have a position in your portfolio that overweights the entire portfolio. So what happens? In the last time when Apple did a 7-for-1 split, most of my clientele sold half of it off. We were so overbalanced in Apple, we sold half of it off. We now are playing with the house's money. It's interesting because most of you that are in options at one point in time held Apple stock. So a lot of there we are, sorry. A lot of these leap calls that we have here are ridiculously profitable, and the cost basis for these ones right here were more than paid for with some extra sitting on the sideline of being called out of Apple. The neat thing is these individuals are up basically 300% on their Apple shares. I guess it's up 200% on their Apple shares. The ones here, up 250%. The ones here almost at 100%. The ones here approaching a 300%. Couple new ones are in, little upside down. We've got some at 60, approaching a 200% return. Couple more new ones, a little bit down right now. We've got a call vertical, a $10 call vertical that will pretty quickly be worth $10. Wow, look at this one. We have a $120 call vertical, $8.30 cost basis. You know, here's a couple 1,000%, well over 1,000% return here. $80, so we're looking at 1,600% right there. We've got another $140, that was $120, $140 one at $2.69. $140 by 269. Every $26 is the 1,000% return. This one will be what? Like a 6,000% return. Really, some really good positions that we're already in. And obviously, average cost basis at 200. This is more likely an average cost basis in that 75 range. These 7,000 shares will turn into 2,800 here on the 31st of August. We're doing ridiculously good in Apple. When I'm looking and when someone's going to ask me, well, Kevin, we look good in Apple, but what about Boeing, right? Simple. It's coming. I want to chastise two of you that sent me emails. Well, I don't think I beat the S&P this month. And I'm like, well, yeah, I know. Read the sentence or two after I talk about Apple. If you're in Boeing and Under Armour, you're probably not beating the market this month. It's patience. We're looking at having the opportunity to add some more shares for protective puts. We actually have some cash available that we could do this with. We've already added and rolled out the majority of our calls. We're waiting for an FAA approval to take advantage of some movement on Boeing. It's kind of simple, but it's a tough one to sit through. Guess what? If it was always easy, everyone would be doing it. Boeing will be our next one, if not Under Armour, that'll have a huge run up. Well, why are you saying Under Armour? Because Under Armour is Smith & Wesson. Under Armour could expect this same type of movement. And we're doing everything we can to lower the price down so that when it's back up to 28 to 34 to 35, you're going to be sitting ridiculously pretty. If you're following us on your FCX trade, it is exactly the same thing. If you'd read through Under Armour's reports, they did pretty darn good, doing everything right. Doing everything right, in my opinion, when you beat by 170 million more dollars than expected, you're doing awesome. Long puts are in place. Have over $1. We're going to add a ton more shares of Under Armour here in the near future. The good news is they're not like some of what I have as an article here. Where's my article? Not Intel. 5 things to notice before the stock market opens. Lord & Taylor and Taylor Brands file for Chapter 11. Lord & Taylor and Men's Warehouse owner Taylor Brands filed for bankruptcy on Sunday as the coronavirus pandemic causes more damage to the retail sector. Lord & Taylor filed bankruptcy protection. J. Crew, Neiman Marcus, J.C. Penney have also filed for bankruptcy protection. Under Armour is doing ridiculously well compared to all of those that are listed there. I actually think, based on their earnings in Nikes and Adidas, they kind of kicked butt over both of those two. It's a bummer because they had a day where, man, they looked ridiculously good. I thought they had it. I thought they were off to the races, where they would stop off really close to 1750 is where they should have headed to. Instead, they only got up to like 13. Where'd they end up at? Come on, give me a month. Give me a chart. Where is it? Why do I not see it? I swear to you, they were up to 13. Maybe they're only up to 12. They had an opportunity. They had an opportunity. The short answer is 950 is the bounce. That's where I will probably take protection off. If they get down around 950, I'm going to pull it off, add some more shares, and go without protection. Pretty amazing, because people ask me this yet again. And yet again, I want to chastise a couple people. Oh my God, Kevin, we don't have protection. And I'm kind of scratching my head. I showed you about 3 weeks ago, if you kept rolling your protection from the 320 up to the 385, you made less than $7 on a 65, or actually it's a $71 movement up. A $71 movement, and you didn't even gain 10%. If you want to always have your stocks protected, you cannot make any freaking money. That is why those that are in, what's the other one we took off? Those that are in Smith & Wesson. Thank God I'm not rolling every damn day for every dollar, moving and rolling from 18 up to 25. You either believe in quote unquote technical analysis or you don't. If you believe in technical analysis, we are not rolling, because why would you place a bearish position on a bullish moving stock? You've got to figure this out. This is trading 101. If you're going to keep putting bearish positions and rolling bearish positions up every 5 to 10 strike prices on a bullish moving stock, you do not know how to trade. You are plain and simple overprotecting, not using technical analysis, and you are wasting your money. Let some stocks run. What does this look like? For Apple, it looks like protection down at 320. Which occurred probably right in here. And it was earnings protection at 395. So we let the stock basically run from 300 to 435, costing us roughly, Keith, what would you say? Type something in there. I want to say 12 and 16, maybe $28. We took it off both times, one for a slight profit and one for a $7 loss. So it cost you, let's say, $9. $9 on a $135 run up. If you had followed the rolling from 25 on a certain advisory, you couldn't even make $7 on the run up. You've got to be smart. This is what a bullish trend looks like, and this is why you let your stocks run when they're bullish. SWBI, an awesome one. Look at your runs. A pop in earnings, we have probably lost $2 on a movement, and this is worst case scenario, $2 on a movement from 12 up to a current price of 25.77. The stock moved $13.77 and you captured $11.77 of it. If you kept adding your protection, with all due respect, every 1 to 2 strike prices, you just screwed yourself. 100%. FCX, this is even a tougher one. It is sitting at a close of $13.10. For all intents and purposes, you lost 60 cents in April earnings, and you lost another 60 cents-ish, 44, another 43 cents in a roll, another 40 cents. You basically lost $1.23. $1.23 from $8 up to $13.10. $5.10, you lost $1.23. If you kept rolling on every strike price, you cannot make anything. I love collar trading. I love collar trading because, let's face it, it protects you from losing a 30-year portfolio. It dollar cost averages without having to ask for more money placed in the account. It adds shares that allow a stock to come back and make a killing in your portfolio. It sucks to have to be patient. If you can't be patient, if you want someone to try to outguess the market, which gives you a 1 in 3 chance or a 33% chance to be profitable, go for it. Good luck. If you want to be patient and get through it, you're going to be handsomely rewarded. And it's pretty interesting. I'm going to be the first one to tell you. It looks like Jeffrey Dunyan is doing what he can to start to become licensed, bonded, and insured. It'll be great to see him finally come over to somewhere where I think he could have been for forever. And he'll have the opportunity to do a little bit of his trading, being licensed, bonded, and insured. I'm going to take this out and reposition it because something you should be doing. For those of you that are doing any trading yourself, two comments were just put in here, and you both are 100% correct. A good way to exercise patience is to leave the room if you're too nervous. Come back tomorrow. As Kevin has always said, a good way to be patient is to nail your hands to the chair. Ouch! I agree with both of them. For those of you that are trading yourself, that have some portion of your money that you're trying to trade yourself, I don't advocate that you look over your portfolios and critique yourself every single day. The only thing that's worse than doing that to yourself is, in all honesty, being a gymnast, where they critique your looks, your butt, your twist, your turns, your leaps, your pushes. It's ridiculous. What a god-awful sport gymnastics is for a girl, where they critique everything. The size of the bun that you have your hair in, it is ridiculous. Only thing worse is day trading. Looking at your account every day and critiquing yourself, your trades, what happens every single day. Eventually, people are going to learn. You make your best educated decision with the information you had at the time, and that doesn't mean you're always going to be right. Newsflash for everyone. I have yet to meet Jesus Christ, and I'm pretty sure he's not trading. He's got more important things to do. But it certainly doesn't hurt to go over your portfolio every week. That's what we do. Steve and I every week go over every single portfolio. We go over the group on a monthly basis, as well as every portfolio monthly. Quarterly, and obviously every single year. We don't beat ourselves up on the weeks. If we can justify what we're doing, if we're over leveraged in Boeing because it's fallen 75%, but we've added 100% plus or 200% plus more shares of stock, we can live with it. Go over weekly, monthly, quarterly, yearly. Do what you have to do. Give yourself feedback. Allow yourself to be wrong. If you think you're going to be perfect every time, the world is going to be god awful for you, and life is going to suck. But make sure your process allows you to be wrong, but still win in the end. And the end is not waiting around for the stock market to come back. For those that are in 2008, it was a 19, almost 20-year period to double your portfolio once. Averages are not your friends. There's something stupid people are being told and believe in, so that the street can keep your money and screw you. It takes more. Be willing to put that effort in. All right, here we go. These two are out. Baidu is coming up in the near future. Costco, Disney is this week. Ford, Facebook, Eli Lilly is out. Eli Lilly's earnings were awful, but they got a nice bounce today that, we're in final stages of a COVID virus, vaccine, or antibody is what it should be called. Target's down the road, Under Armour's out, Visa's out. We're down to a select few coming up for our earnings. Really, it'll be Disney, Target, and Baidu in the near future that'll move our positions. Very interesting looking at the indexes, especially the Dow. The Dow, come on Dow. The Dow is testing a really, really unique support and resistance level. We had the 50-day trying to cross over the 200. If that 50-day can cross over and jump above 26,226, we are looking at something called a golden cross, where in the next 6 months you're looking at an 8 to 9% gain in the index. Might not happen till November, but it's challenging and fighting to get that cross. Still technically bullish, but I would call it flat. The S&P 500. It has its crossover. It's on its 8 to 9% uptrend already. Very bullish. This makes me scratch my head if my thesis that we're going to have our horrible September, October, if that might be put off or paid for by a stimulus package, which means we're in for a huge drop next year. We're in for a new president earnings crush is what we're going to get. And or the same president earnings crush. And check this one out. We've already got our 8 to 9%. On our NASDAQ, which means we should start to see a reversal. Simple technical indicators that we should be paying attention to. Okay, I think I did not do a good job of setting this up. If you ask me where the S&P will end August, I'd probably say down 2%. Economic reports are not correct. Dang it, Hurley, you should have done a better job. All right. So, economic reports, auto and truck, which could move forward overnight, construction spending. When we come to our Monday earnings, Clorox, which didn't do all that well, McKesson, AIG, Hilton, Mosaic, Rambus. When it comes to Tuesday's earnings, all we have is factory orders. Pretty slow day tomorrow when it comes to economic reports, which means we're probably going to see the news and earnings guide our futures and our day tomorrow. Emerson, British Petroleum, Jeld-Wen, Dollar Tree reports, Ralph Lauren, which is going to suck. Activision has earnings tomorrow. Allstate, Beyond Meat. I'm sorry, Beyond Meat does not taste like meat unless you've never tasted a cow. Monster Drinks, that'd be a good one. I'm trying to get Keeve to invest in that one. Win. And our big one we're going to pay attention to is Disney after hours tomorrow, Tuesday. Wednesday, we still have the NBA. We have the ADP employment report, which has not been so close to our non-farm payroll as of recent. And we have trade balance. Not looking for good economic reports on Wednesday. We'll most likely have a down day on Wednesday. We do have Humira reporting, liquid lumber liquidators, Office Depot, Wendy's, 3D, that's kind of funny. They're horrible. ADT, HubSpot, Jack in the Box. I don't know why I still watch Jack in the Box. They don't do anything. KBR Homes, New Skin, Roku, which will be an interesting one to watch. Square for payments will be interesting. Vivint Solar and CVS is the one we're looking for here, even though a lot of CVS has been out and done with. Initial and continuing claims on Thursday with the ISM non-manufacturing. So that's a cute way of saying manufacturing. The services ISM. Big earnings day here. Cardinal Health reports on Thursday. LNG, which is Cheniere Energy, right? Fluor, Hilton, they're gonna suck. Murphy Oil, which is gonna suck. Glad we pulled out of them. 50% higher than it is right now. AMC movies are gonna suck. What else do we have? First Solar, probably going to suck. GoPro, very surprising their last earnings. They might be having a pretty good turnaround. HLF, that pyramid scheme health foods one. Hertz is sucking. TiVo, T-Mobile, if you're a Sprint people, this is now where your Sprint shares are at. Uber, Yelp, and ZG, which I just can't remember what it is. Friday is the big one. This will move our markets. We'll move markets across the world. Average work week. Wish I could spell a little bit better. We have non-farm payroll. We have private payroll. We have hourly earnings. We have unemployment rate. What am I forgetting? Consumer credit, another big one, and wholesale inventories. Pretty big day. Pretty big day coming up on Friday. The good news is on Friday, for all intents and purposes, nothing comes out that that I saw that was earnings worthy. International, as I look, nothing stood out internationally that we need to pay attention to. How am I looking to trade? Again, I'm just preparing protection for earnings and adjusting as needed. We have the Senate GDP unveils a Cronus relief plan with a 75% wage replacement employment. Please read through it. This is what they're arguing about. Very interesting. ExxonMobil makes no sense. This price makes no sense. I completely disagree. I completely think this makes all the sense in the world. It's simple supply and demand. A lot of people think, yeah, but it used to trade at $100. I get it. It doesn't anymore. It's getting its butt kicked. It is not going to see cash flow till 2025. It's just the way it's going to be. It's awful. Not a smart time for the next 4 to 5 years to invest in energy when it comes to oil. A ton here on ExxonMobil, but plain and simple, it's not worth the price. Boeing, I'm going to show all parts of Boeing. Again, we'll have a $60 pop in it when it gets its FAA approval, which should be coming any day. Intel is really hating it, plain and simple. Intel is not a good buy, and it does not look like it's going to be a good buy for the near future. Read through this. read through this. It's important to understand Intel. It's important to understand the strength in AMD and NVIDIA and why AMD is talked up so highly. 5 things to know before the market opens. I put this in here just as the stock futures were rising today. White House Democrats deadlocked in unemployment benefits. Microsoft confirms its opportunity to buy TikTok. U.S. is in a new phase of pandemic with extraordinary widespread cases. I just wish the son of a bitches could figure out how people are dying in real life. And I wish we could do a better job of finding protection for those that are running into COVID cases. I also put a little bit about Eli Lilly here. They really should be heading down to 135. Stopped towards 115, got a good bounce today in a late stage trial. In all honesty, I couldn't see how far along they were. So you'll probably get your little dead cat bounce. Expect Eli Lilly to move down to 135. Yes, we have a full color trade on Eli Lilly. With that said, I've taken up a long time today. Questions? Are there any questions as I've been babbling through here that you've been thinking to yourself, Kevin, I want to ask you about this, or Kevin, I want to ask you about this? Let me babble for 30 seconds to let you guys come back and ask any questions you have. Rich, I will give you a call. Give me 10 minutes after we're done here, just so I can give you a quick call. And then I've also got one, just so you know, Rich, I've got one right stacked after that, which will be 7 my time for you, 7:10 is your time, my time. I've got another one stacked at 8. Any idea why Amazon isn't considering splitting? Bill, I think that is a Jeff Bezos ego, thinking that someday his stock can turn into Berkshire Hathaway. So in all honesty, another great example where ego shows you why a CEO is not always smart for their company. And I am not a fan of Jeff Bezos when it takes you 20 years to become profitable and you inflate the hell out of your stock price. So there's my best answer for a very simple question. Ego, our prices were $2,000, and you've shunned out 90% of the retail trader. And in all honesty, most hedge funds don't even like being overweight in something like that. So way to screw your company over on a stock price. Jamie Dimon probably has a bunch he could share with Bezos. Good question. Any other questions? Where do you think Apple's going to go? I made the comment, it wouldn't surprise me if Apple got into that 480 to 500 range. I would wholeheartedly expect Apple to hit 500. A little irrational. That allows for it to have a pullback when it does its stock split. And, you know, if it got to 500, its stock split at 125. Might go down to 100 and then head itself back up from there. So between 480 and 500 would be my expectation on Apple. As welcome to a stock that's now acting like the Apple of old. Well deserved when you can beat your revenue by $7.4 billion. Great question there. All right. Hey, guys, have a wonderful evening. As always, I enjoy spending my Monday nights with you, trying to give you as much information as I can to help you understand where your portfolios are and what they are doing. I will see most of you tomorrow evening. Have a great night, and I will see you then. Bye-bye.